Hey, welcome back to another YouTube video. I'm going to break down what the hell is happening in this crazy market and talk about where we can potentially go from here. First thing you always want to look at when you're going to be making a plan is where the overall market is. So you can look at the S&P 500, and then when we look at it here, we see that we are in a crazy, scary time with the last 5 weeks closing red and potentially making lower lows here. Now, does this mean we crash? Not necessarily. Does this mean we could bounce? Also not necessarily. The point of this video is not to try to predict what's going on, but the idea is to see where the key levels are and then wait and see how prices react. Because in all reality, we can sit here and try to predict this is going to happen or that's going to happen, but we have no way of knowing that. So the only thing we can do is rely on a strategy, whether that's technical analysis, Elliott wave theory, whatever it is. You just have to be consistent with it, find something that works, and keep applying it. So I'm not trying to predict what's going to happen. What I am doing is just sharing how I would draw levels and what I would look for to make a decision. Remember that ultimately, whatever the S&P 500 does, which is the chart that I'm watching right now, the index, that's what's going to dictate what happens in the market. So you have this one, and then you have the NDX, which is the symbol for the NASDAQ index, and then you have the DJI, which is the Dow Jones. As you can see here on Friday, Dow Jones lost about 0.3%, the NASDAQ lost about 1.2%, and then the S&P lost about 0.6%. So just zooming in here, first I like to look at big picture and see on the weekly chart what happened. So this dip right here was Corona time, and then this is March 2020, and then as we go week by week, crazy bull run all the way up until the high of 2021, and then now in 2022 it's been scary and bearish. So first thing that comes to mind here is this low that just sticks out, and then also you have this right here. That's key. And then also you have this low from March, 41.57. So potentially I'll be looking for bounce plays if it's holding above 41.14 and holding above 41.57. If it's holding under, anywhere under 40.56 to 40.62, under that is very dangerous and it could crash. And another thing you could also do is just go there, print, scare people out, and then start reversing from there and then start pushing somewhere in this area, right? So trying to predict is not going to be the best idea. It's just you got to sit back, know what your strategy is, and then wait to see. Because at the end of the day, 4 things can happen. Either it's going to bounce, or it's going to break down, or it's going to reject or break out. So you can either play the bounce or the breakout, which is bullish, but you have to have the S&P 500 looking strong. Or you can play the rejection or the breakdown, which is bearish, but you have to have the S&P 500 also crashing or looking very weak. Now, if you try to play a rejection or a breakdown, but the market's looking strong, you're just going to be buying like a put, for example, on a higher low, and then just end up getting screwed as it keeps pushing higher. So you need to go with the trend. And if you're going to try to call out a reversal in the grand scheme of things, you have to be very careful with that. Picking tops and bottoms is very hard. You're much better off trying to play the trend, right? So now currently the trend is, well, the overall trend is up, right? We're still near all-time highs compared to, like, we're not even we're 14% off the high. Back in crazy Corona times, it was like 35%. So can this keep going lower? For sure. This could go all the way down. So that's why it's like the trend now is down if you're going to be like a short term, but you have to be careful with certain key levels because they can bounce, right? As you can see here, last week, if we go to the daily, it bounced multiple times off this May 2021 low. If you go here, bounced hard, May 2nd, pushed up 6%, but came right back down the next 2 days. So this is a very, very, interesting time. Couple stocks that are on watch for tomorrow for me. Square, have this charted out like this. These are the levels that I'll be watching. Recently formed a hammer. Not as much of a downtrend as I would like, more so consolidation here, but can still be in play. And then if I were to go long, stop loss would be at around 92. And the reason is that there's this zone here where it bounced a couple times, and then you have this major shakeout level where most people probably bailed out. All the weak hands are flushed, and maybe no more sellers step in, and just buyers just push this to 111, 112, and just high. So that's why I'm watching this, because all the zones are clear. I got a candle here. I would have a potential stop loss defined, and that's pretty much it. Have an edge, have a stop loss, pull the trigger. But just understand that that stop loss could hit. So that's why you got to be ready to exit, or just put in a hard stop and let the trade play out. Right, for Tesla, also charted this over the weekend, and then a couple of key levels that I'll be watching for Tesla. Let's see why I got 944 because of this. So I'm going to zoom in here. You got a couple of highs here that are important. For example, this is 947. That was the highest point it went to before bottoming at 700. So that 947, 944 zone, I like it, so I'm gonna draw it. The bottom of that is 944.2, and then the high is 947.77. I think that's what it was. Yep. And then I'll just extend that so I'm able to use that zone in the future. So I got that high, I got this high also, and then slowly scrolling down here. That low is definitely important to keep on watch. The high of this 955. So Tesla here over 888, 890. If that holds, can potentially look to retest 910s, 920s, the next level higher. The moving average is higher, but it's been in a crazy chop here, a volatile chop, trying to push up right back down, like 900 to 98 to 874. A lot of sellers there, a lot of sellers. So these are the levels that I'm currently watching for Tesla. Another one that I'm interested in is Amazon. Amazon has been on a crazy sell-off. Like, looking at this weekly chart is just insane. It's down 33% in 35 days. 35 days. This is crazy. On above volume, as it's nearing its split. Is it due for a big bounce? Is it? Who knows? It could keep going down. It could end up at 2070. It could end up at 2150. So it's like, never buy a stock just because it fell way off or it fell too much. That would be like trying to predict a reversal. You don't want to do that. But what you do want to do is have a reason to enter, at least, if you are going to go against the trend. So here, for example, I got a 2250 zone for Tesla. So if I were to enter here, whether it's calls or shares, I'm going to be very careful under 55, for example. Like, my stop loss would be at 55 or 54, somewhere there. So definitely you got to have an alert on that. But in terms of a reversal, I like this doji candle. Doji candle shows that, sellers weren't able to drive the price lower, especially after this downtrend. And then also somewhat of a inverted hammer, because you have a long upper wick where it shows that buyers, try to step in at least. They've been trying to step in here, but sellers have been just way over aggressive. So we'll see how that turns around. But basically, look at this. You have this low of 23.01. You have this close of 22.95. One thing I like to do is I'll draw that zone right there, and then that could be a potential key area to play. This could be a nice bounce for calls. But again, remember that a huge red candle can continue the trend, which is easier to go and continue with the trend than it is to reverse. So, but what's going to determine all of this? What SPY does and what the overall market does. So, that's pretty much it for this week. If you have any questions, please let me know. Stay tuned and see you on the next video.